Okay, so let's unpack this. We're diving deep today into, well, a really fascinating conflict playing out in the financial world, pulled right from the material you shared.
That's right. You've got Warren Buffett on one side, quiet, cautious.
And then the other side, Donald Trump, loud, immediate impact.
Exactly. And the reading, it paints this incredible picture. Buffett's holding just a mountain of cash, a signal many are reading as, well, worry.
hmm While Trump is like actively telling people buy stocks and showing he can actually move the markets just like that.
So the central question, the one this material really forces you to grapple with, it's pretty stark, isn't it?
Yeah. In today's market, do you lean into Buffett's signal? Hold back, stay in cash.
Or do you, try and ride Trump's influence and buy?
Our mission here in this deep dive is to cut through that noise in your sources. We want to understand the history behind Buffett's moves, his current worries,
Look at Trump's very real market impact.
and figure out what this clash means for you, trying to navigate these, frankly, wildly different signals.
It's a complex challenge, no doubt. And the material you shared, it starts by highlighting just how striking Buffett's position is right now.
Yeah, he's sitting on a truly massive amount of cash and short-term U.S. treasuries.
Massive doesn't quite cover it, does it? What are the numbers again?
The reading puts it at $334.2 billion. That's as of April 2025. Just think about that $334 billion in cash.
Wow. And it's not just the raw number, right? It's the proportion.
Exactly. It represents 53% of his total assets. And what's really significant, something your material emphasizes, is that this is the highest level since, well, since the 2008 financial crisis.
And what's fascinating is seeing this against his history, which the material also covers. Think back to the late 90s, the dot-com bubble.
Right. Everyone else was chasing tech stocks, going crazy.
And Buffett, patient,
Yeah.
holding cash. People thought he'd missed the boat entirely.
But then the bubble popped in 2000, and guess who was ready to buy good assets cheap?
Buffett. And you saw the same thing, didn't you, around 2008?
Yeah, the reading notes he started getting out of subprime-related stuff way back in 2003. His cash peaked around 2005, actually.
So way before the crash. Then, when the market imploded in 2008, boom, he was there, ready to step in again.
It shows this clear pattern, doesn't it? Patience, understanding cycles.
Definitely. And his current view, according to the material, is that he's specifically waiting for opportunities, and he thinks they might show up within, what, the next 5 years.
So that huge cash pile, it's not just sitting there doing nothing. The reading calls it a worried vote on the future.
A worried vote. That hits hard. What's he actually worried about? The material mentions his shareholder meeting.
Yeah, what are the specifics?
Okay, so the reading points to 3 big potential risks he seems focused on. First, and maybe the biggest for him, is the U.S. fiscal situation.
Uh-huh. Government spending, the debt, that whole picture.
Right. He's really troubled by these unresolved long-term issues. Sees it potentially leading to, U.S. dollar devaluation, maybe even serious social economic turmoil.
Wow. Devaluation, turmoil. Those are heavy concerns.
And the material quotes him saying how extremely rare it is for the U.S. to run deficits this big.
Okay, so that's number one. What else?
Second is trade policy. He basically calls trade wars a huge mistake, thinks they pose long-term risks to growth globally.
Makes sense. And the third?
Third, listed right alongside the other two, is government governance. Just, how things are being run is a key risk area.
So it's not just market stuff like valuations or bubbles. It's these deeper systemic things.
Precisely. And the reading, it reinforces that inflation is still a background worry for him. Could get worse, maybe, if there's not enough financial or monetary discipline.
Okay, so the big picture is caution, driven by these really macro worries. But let's look at his actions, because the material points to a really interesting example with Apple stock.
Ah, yes, the Apple move. That definitely jumps out, raises questions about, how he operates.
What happened there?
Your reading highlights Berkshire Hathaway cut its Apple holdings significantly. Nearly 50%, it says. That was in Q1 2024.
Okay.
Then, just a month later, Apple announces they're ditching their electric vehicle project. The one they'd sunk billions in years into.
Whoa. And the material sort of hints.
It does. It doesn't shy away from suggesting the timing implies Buffett might have had some insight, maybe some information influencing that decision, or just incredibly good timing, let's say.
It makes you wonder, for sure.
And there's another example the material uses for timing his investment in those 5 big Japanese trading companies back in August 2020.
Oh, yeah, I remember that.
The second that news dropped,
Uh-huh.
everyone else piled in, right? Other investors, funds. Those stocks jumped like 10–20% almost immediately.
And eventually.
Eventually, that investment more than doubled. It just shows his actions alone could be a huge signal.
Yeah.
Maybe based on analysis, maybe information others just don't have yet.
Okay, so one side, the cautious, long-term strategist, deep pockets, maybe acting on insights others miss, signaling weight.
And on the other side, you have the whirlwind, Trump.
Right. A total contrast. Your reading shows how he can move markets, like, instantly.
Yeah, it's not months or years.
Yeah.
It can be an executive order or, like the material says, just a post on social media.
The examples are pretty wild. April 2025, stocks dip, then rapidly rebound right after Trump tells people to buy and pauses some tariffs.
And it happened again, May 8th, 9th, 2025. Trump's out there saying, buy stocks if trade or tax stuff works out.
Yeah.
Hours later, May 9th, he pauses more tariffs.
And stocks jump immediately.
Then the next week, another surge. S&P up 3.3%, wipes out its losses for the year. Why? U.S.-China announced temporary tariff cuts.
So Trump's influence, as the material shows it, it's immediate. It can totally shift market direction dramatically.
It's a force driven by politics, by sentiment, operates on a completely different clock, different logic than, say, fundamental analysis.
Which brings us right back to that dilemma for you, the listener, looking at all this.
Yeah, do you try and ride that wave? Trump's powerful, but pretty unpredictable signals, the ones that seem to need instant reaction.
Or do you listen to Buffett, his patient, cautious signal based on those long-term worries and maybe unique insights?
And your reading points out the catch with just following Trump. His actions are sudden. You need to react instantly. How does an individual investor time that perfectly?
Almost impossible.
Right. Plus, what happens when that direct, tweet-driven influence isn't there anymore? It's not like a repeatable strategy you can bank on.
Okay, this is where the material pivots a bit, doesn't it? It goes beyond just Buffett and Trump to look deeper at how the market itself works.
Yeah, and it offers a pretty critical take on standard value investing. You know, the kind of often taught or tried by individuals, why it's so hard.
It acknowledges the appeal, right?
Yeah.
The logic seems simple.
Totally. Find good companies, buy them low, hold them, grow together. Simple, appealing. That's why it's mainstream.
But then the material just zeroes in on why it often doesn't work out for individual investors in the real world.
And a huge reason cited is just the sheer difficulty of holding on when things go south. Like really south.
We talking 30%, 50% drops?
Exactly. Emotionally, financially, that's brutal for most people. They panic. They sell at the bottom.
Mm-hmm. And critically, your reading says individuals usually lack specific advantages, the kind successful pros or big players have. Advantages you kind of need for value investing to really work.
Okay, this is key. What are those advantages according to the material you shared?
It lays out three main traits. First one, information advantage.
Knowing stuff others don't. Is that it?
Basically, yeah, but the material breaks it down, like A-level info, the stuff top decision makers know before anyone else. Then B-level, maybe what CEOs, CFOs know. C-level, managers.
Okay, and what are most of us working with?
We're stuck with public information, financial reports, news, analyst research, the stuff everyone sees.
And the problem is,
by the time you get it, your reading says it's usually already baked into the price. The analogy used is great.
Yeah.
It's like knowing the exam scope versus knowing the actual questions.
Oh, okay. So public info, almost by definition, is often late to the party if you're trying to time things.
That's the strong implication from the material. And look, it clearly states using that A-level info is illegal insider trading. Nobody admits to it. But the point is that level of valuable information exists, just not for most of us.
Got it. Okay, information advantage. What's number two?
Second is the ability to add value. This isn't just picking stocks, it's having the clout, usually through owning a big chunk, to actually help the company get better.
How so? Like influencing strategy?
Yeah, strategy, operations, branding, distribution, whatever it takes.
Is there an example in the reading?
Yep, mentions Hill House Capital and Blue Moon, that Chinese cleaning products company. Hill House didn't just buy shares and wait.
What did they do?
They actively worked with Blue Moon, helped them sharpen their strategy, fix operations, and got a huge, like, 20x return before the company even went public.
Wow. Compare that to
you buying, say, shares in Sun Hung Kai Properties. You can't exactly call up management and tell them to sell off undervalued assets, even if you think it's the right move. You just don't have that power.
Right. So you need better info or the power to make the company better yourself. What's the third advantage?
Third one is sufficient capital. Plain and simple.
Meaning?
Meaning having enough money that a big market drop the material mentions 50%, that point where lots of retail investors hit the panic button doesn't force you out or cause, unbearable stress.
Okay.
And it also means having capital that isn't needed tomorrow for, life stuff, buying a house, getting married, kids' education.
So it's patient capital,
Yeah.
money you can genuinely afford to tie up, ride out the storms, without needing it back urgently.
Exactly. And these three advantages, information, value addability, and sufficient capital, they lead into another big point the reading makes.
Which is?
The idea that the big money is correct.
Ooh, okay. What does that mean exactly?
Yeah.
Sounds challenging.
It is. It basically suggests that in the market, the price you see isn't always about some pure calculated intrinsic value. Often it's just dictated by where the big pools of capital are going, by their actions.
So price can disconnect from fundamentals
Hmm.
because big players are moving money around.
According to this view from your reading, yeah.
Yeah.
Especially in the short or medium term. The material gives examples, like comparing a hot stock, say King Shop, high PE ratio but flying high,
Okay.
versus a more stable one, maybe a Chow Tai Fook, lower PE, trading sideways, fundamentally different, right?
Yeah, sure.
But the reading argues, look, ultimately, whoever has the money to buy up the stock is the one who's correct about where it trades right now.
Because their buying power literally moves the price.
Hmm.
Supply and demand on a massive scale.
Precisely. The Hong Kong property stock example illustrates this too. Companies like Sun Hung Kai Properties might have assets technically worth more than their stock market value. They look undervalued.
Mhm.
But the stock price just stayed stuck in a range, the material notes. Why? Because the specific capital needed to force that value unlock, it just wasn't flowing in to big the price up.
Interesting. And this ties into that Pirco concept
Hmm.
too, the market maker or manipulator idea.
It fits right in. The material describes how a Sura, someone with enough capital and the intention, could deliberately push a stock down, maybe spread negative news, cause panic.
So they can buy up shares cheaply.
Exactly. And then use their capital to drive the price back up. That's got nothing to do with fundamental value changing day to day. It's about capital and manipulating sentiment for profit.
Okay, wow. Let's try and pull these threads together. We've got Buffett, cautious sage, deep pockets, maybe acting on better info or just incredible patience, signaling worry with that huge cash position.
And then Trump, the disruptor, showing how politics and just sheer force of will can create sudden, powerful, if unpredictable market moves.
And the material you shared connects them by suggesting Buffett's success isn't just reading public reports. It likely involves those higher-level insights, or that amazing patience that only deep capital allows, letting him wait out the storms, wait for chances others miss because they run out of money, or patience, or information.
Right. And Trump's influence is like a case study in how non-fundamental stuff, politics, sentiment, big sudden flows of money can be incredibly powerful market drivers, even if they seem totally random from a value investor's view.
So the core message seems to be, for most individual investors, trying to perfectly mimic the legends of value investing is really, really hard without those key advantages.
The information edge, the power to actually influence companies, or just massive patient capital that can handle anything the market throws at it.
And market price, especially in the short run, is heavily swayed by where the big money flows and by factors well beyond just a company's textbook intrinsic worth.
It definitely paints a complex, maybe even unsettling picture of today's financial world. You've got these traditional warning signs from Buffett flashing red.
Right alongside these immediate, politically driven jolts to the market from figures like Trump.
It really highlights that reality the material points to. Information isn't equal, and big capital has huge sway over prices, at least day to day, week to week.
Yeah. So given all that, and especially the idea from the material that public information might be the least valuable kind for timing things, it leaves you, the listener, with a pretty potent question, doesn't it?
How do you find any meaningful edge as an individual investor? Or maybe, what other approaches even make sense if you don't have the built-in advantages of big money?
Definitely something to chew on.